that is a new chapter of the American Payroll Association, or the APA. If you are a member of APA National, we would love for you to join the new local division. This chapter of the APA is going to be focused on education and providing a network of support for all payroll professionals from companies of all sizes. We have a unique culture here on the Western Slope, and this association will be a place of collaboration for payroll updates and technicalities. We will be creating study groups for payroll certification testing, as well as providing an opportunity to collect those RCH credits that are needed to maintain accreditation. And you can receive those at every monthly meeting. After this webinar, we will send out the slide deck and a recording of the webinar. This will also be posted to our Facebook and LinkedIn pages, and you can find those by searching for Western Region Payroll Association. So if you would please find us on social media, we try to make relevant posts there with articles and updates. There's currently a lot of those happening, so we have a lot of posts going on. I will also send out a membership registration form that you can complete and return if you're interested in joining or just learning a little bit more about what the benefits of membership are. We meet during lunch via Zoom on the third Wednesday of every month. So our next meeting will be August 19th at 12. Auto Paychecks is excited to be a part of this organization and the sponsor for today's webinar, as our very own Melissa will be presenting. Our team is very active in the WRPA and will serve as technical support and strive to share our knowledge with the group. So Melissa is our operations team lead here at Auto Paychecks and has been with the team since 2015. Her current responsibilities include payroll tax compliance with the IRS, state and local agencies, relationship management, and internal and external trading with stakeholders. Melissa participates in the Western Region American Payroll Association, as well as the monthly reporting agent forum conference calls. She holds a BS in mathematics from Colorado Mesa University. I can't keep track of what their name is anymore. And she was a high school math teacher for 5 years with Mesa County Valley School District prior to joining the Auto Paychecks team. She also is a volunteer with the volunteer member of the Plateau Valley Fire Protection District. So we are really proud to have her with us. I will keep everyone muted during the presentation, but if you have questions, please submit them through the chat. I will be keeping an eye on that and try to interrupt Melissa with those questions if we can get to them at that time. If not, we will try to get to as many questions as possible at the end of her presentation. So I'm going to go ahead and hand it over to Melissa. We can't hear you yet. Melissa, are you there? Always some technical difficulties. All right. Let's see what's going on here.
Can you hear me now, Manon?
Yes, there we go. Thank you.
Okay, perfect. Sorry. All right, thanks for the introduction. Thanks everyone for joining us for this exciting topic today. Like Manon said, if you have any questions, go ahead and submit them through the chat and she'll keep an eye on it. And I'll try to leave some time throughout the presentation to answer those questions. And if not, we'll try to get to them at the end. If they are really specific, we may get back to you later if it's really pertinent to your company and only your company. So with that, let's go ahead and get started. Okay, so first of all, the information presented in these materials and that is further provided by the presenter should not be considered legal or accounting advice and should not substitute for legal, accounting, or other professional advice in which the facts and circumstances may warrant. We encourage you to consult legal counsel as it pertains to your own unique situations and or with any specific legal questions you may have. Okay, so today we're going to look at the payroll tax considerations for second quarter 2020. Due to COVID, there's been lots of changes, and we'll look at a few of those that are impacted on the Form 941. We're also going to look at Form 7200. We're going to look at some specific 941 scenarios, which includes Worksheet 1. Worksheet 1 is a new addition to the instructions for Form 941. So we'll take a look at that, and then we will address any questions that you guys have. So second quarter 2020 tax filing considerations. The first thing that we want to talk about is the Families First Coronavirus Response Act, or the FFCRA. I will refer to that a lot throughout this presentation. This was kind of the first thing that came about because of coronavirus, and it stipulated that employers must pay emergency paid sick leave and emergency family and medical leave for any employees that are out for reasons related to COVID. It was effective April 1st through December 31st of this year. So any time that employees had to be out of the office, whether it was because they had COVID, whether they had a family member that had COVID, or even possibly their child's school was closed due to COVID, this FFCRA Act required them to pay the employees, required the employers to pay the employees for time that they were out for these reasons. Because of this act and them requiring this payment to be made, they also allowed the employers to take tax credits that were equal to the amount of the qualified leave wages paid to the employees, as well as the Medicare that was paid on those. The wages were exempt from Social Security for the employer, not for the employees, but the employers were able to claim a tax credit for the wages to make it more fair for them, since it was being required that they pay that. So we had a couple of ways we could take the available credits. The first way that we could take the available credits was by reducing federal employment tax deposits throughout the quarter for the available credits. That was the preferred method by the IRS, and it was the fastest method. So you didn't have to pay as much payroll taxes because you were taking those credits as you went. If that was the way that the credits were taken, then we'll look at that specific scenario on the Form 941. A second scenario is if you did not reduce your federal employment tax deposits throughout the quarter, then you could have requested advance payment on Form 7200 from the IRS. This form was not required by any employer, but it was an option if you wanted to request advance payment of those credits back to your company. The third option was to pay all the taxes and then make a request on your Form 941 for the available credits that were not already taken throughout the quarter. So we're going to look at those scenarios. The second thing that came about in second quarter was the Coronavirus Aid, Relief, and Economic Securities Act, which we're going to call the CARES Act. This had several pieces to it, and we're not going to touch on all of them, but we are going to touch on a few that impacted the Form 941. The first one of those is the Employee Retention Credit. And the first thing about the Employee Retention Credit was that it's a refundable tax credit against certain employment taxes equal to 50% of the qualified wages. We already had a conversation on the last slide about how those credits can be taken, and this credit is available to be taken in the same ways. So those three ways that we just talked about, by either reducing your federal employment tax deposits throughout the quarter, or filing Form 7200, or finally requesting a refund on the Form 941. Those were all options to take the Employee Retention Credit. I do want to say that the Employee Retention Credit was not available for any employers that received the PPP loan, and I'm sure that's a common thing that you guys have heard. So that Employee Retention Credit could not be taken if you got a PPP loan. So if you had a PPP loan, this is not applicable for you. Okay. The Employee Retention Credit did have some maximums. There was a maximum of $10,000 in qualified wages per employee. And of course, the 50% is what the credit was available to the employer. So a maximum of $10,000 in wages meant the maximum credit per employee was $5,000. The employee retention credit was available after March 12th and before January 1st. So any wages that were paid after March 12th and before January 1st, 2021 are eligible for that ERC. Again, there is a maximum $10,000 of qualified wages per employee, which equals $5,000 of maximum credit per employee. And this is only applicable for employers who did not receive a PPP loan. I know we've done several webinars and there's been a lot on the PPP loan, so I'm not going to go into that very much today, but I do want to say it was part of the CARES Act. I'm sure that you guys have heard all about it. It allowed for employers to receive some money from the federal government to help during this hard coronavirus time. If you got that loan, you were not eligible for the ERC credits that we just talked about on the last slide. The CARES Act also allowed for the deferral of employer Social Security tax deposits. This was during the time frame from March 27th, 2020, and it ends on December 31st, 2020. Originally, when this all first came about, you could not defer the employer share of Social Security tax if you had a PPP loan that was forgiven by the lender. That was later overturned by another act, the Paycheck Protection Flexibility Act, which now allows all employers to defer their Social Security tax deposits for that time frame from March 27th, 2020 and ending December 31st, 2020. We'll talk about that a little bit more a little bit later, but that gives you kind of an overview. So, Manon, do we have any questions so far?
No, we do not.
Awesome, we'll keep going then. Okay, so let's take a quick look at the Form 7200. Employers that were eligible to file Form 7200 are employers that file Forms 941, which is the majority, Forms 943, Forms 944, or CT-1. This form, Form 7200, was put out there to request advance payment from the IRS of the tax credits for qualified sick and family leave wages, that FFCRA that we talked about, as well as the employee retention credit, which again, you weren't eligible for if you did receive the PPP loan. This Form 7200 was not required to be filed by any employer at all. It was an option, it was not required. If you did file a Form 7200, it must be reconciled against the employment tax returns that were filed for 2020. So all of the 941s that are filed for 2020 will need to be reconciled with the Form 7200 that were filed. And again, one more time, this form was not required by any employer, but it was an option.
And Melissa, we did have a question come in.
Okay.
Is there a requirement to bring employees back in order to claim the ERC?
The ERC is for wages that were paid to your employees. So if they were not employed by you and you didn't pay wages to them, there's no credit that'll be due to you. So the credit was only available for wages paid to employees.
Yeah, and
so I guess
just with for clarification, the PPP the intention was to bring your employees back. The ERC is
correct.
For employee retention. It's not necessarily, you're not penalized if you don't have the same employee count.
Correct, yes. Okay, so that's a little bit on the Form 7200. Let's take a look at a few 941 scenarios. The first scenario is basically that you're just filing a 941 as if you didn't have any of these things. So maybe you didn't have any employees that went out on COVID leave, so they didn't have any FFCRA, you didn't have an employee retention credit, and you didn't defer your employer Social Security tax throughout the quarter. If that's the case, then lines 5AI and 5AII on the Form 941 will be 0. These are new lines that were added to the Form 941 for this quarter to be able to accommodate all of these credits that were available. So obviously, if you didn't have any of those items, then those lines will just be 0. So worksheet 1 was a new part of the Form 941's instructions that came out, and worksheet 1 only needed to be completed if you did have some of those items. So in this case, worksheet 1 has 3 steps. if you didn't have any FFCRA, ERC, or deferred employment or Social Security tax, you would only need to complete step 1 of worksheet 1. And all step 1 does is determines the employer's share of Social Security tax for the quarter after it's reduced by any credits claimed on Form 8974 and Form 5884-C. So on worksheet 1, step 1, line 1A, is just simply recording the Social Security tax from line 5A of the Form 941. One B is the, if you had any on line 5B, which would have been Social Security tips, so that may or may not apply to you as an employer. Line 1C and 1D are just doing some math. You're just adding your lines 1A and 1B and then multiplying by 50%. That gives us the employer's share of the Social Security. Okay. So there's the pieces that we've already looked at. Line 1E is kind of a unique situation, and if that is your situation, then you would go ahead and enter that on there. But for our scenarios today, we're not gonna enter anything on line 1E. It will just be 0. So 1F, we're just again doing some math. On line 1G, if there was a notice received for the quarter, then that amount would go there. 1H, again, we're just doing some math, adding those lines together. 1I and 1J are credits that you've already received from Form 8974 or from Form 5884-C. And then at the bottom, we're just doing some math, taking all of those lines up above and adding them together, and then doing some subtraction and getting the bottom line. Okay. So back to our Form 941, once we've completed the worksheet 1, which again, if we didn't have any FFCRA, ERC, or deferred employer Social Security tax, the only piece of worksheet 1 that needed to be completed was that step 1. Once we have that completed, we can go ahead and go back to our Form 941 and enter the information. Since we didn't have any qualified sick or family leave wages from COVID for this particular scenario, then those 2 lines will just be 0. The one for qualified sick and family leave wages, as well as the employee retention credit. Form 941, line 13B is again going to be 0 if we did not defer any taxes. If there was deferred employer taxes, then they would go on that line. Form 941, line 13C and 13D are again going to be 0. Form 941, lines 19 through 22 and 24 through 25, again, are going to be 0 because none of these things apply in this particular scenario. Manon, is there any questions after that?
Nope.
Perfect. So that was kind of the scenario where you didn't have anything really special, and basically all those new lines that were put on the Form 941 would just be 0 in those cases. So let's get into a little more complicated scenario where we did have some of those items. And the first scenario we're going to look at is the Form 941 with FFCRA. Again, the FFCRA is the act that was passed that said that if employees have to be away from work due to them having COVID, a family member having COVID, or maybe even their child's school was closed and they just had to stay home to take care of their children, those items would have to be paid. And so let's take a quick look at what the paycheck would look like for that scenario. So we have this sick paid leave and the family sick paid leave. And in this particular example, we're going to pay the employee 24 hours of the sick time and 16 hours of the family sick time. So I just want to point out really quickly that those are not taxable for Social Security for the employer, only the employer. They are fully taxable to the employee. So based off of this, the act said that the IRS was going to allow you to take a credit for the amount that you had to pay the employee when they were out on those leaves, plus the amount of employer Medicare that would have been calculated on those wages. Again, no Social Security for the employer was due, therefore there's not a credit for that piece. So to calculate the credit for this current scenario that I have on the screen, we would take our qualified wages, which if we add those two numbers together, we get $589.34. There is no employer Social Security because those codes are exempt from Social Security for the employer. There's $8.55 for the Medicare that was due on those wages. And so to get the total credit due, we're going to add the wages and the Medicare and come up with $597.89. This amount is the amount of the credit due. And to take that credit, we've already talked about the three ways, but the best scenario, the preferred method from the IRS is that you can reduce your federal tax deposit by that amount. So when paying your federal tax deposit for the payroll that this paycheck was processed on, you can go ahead and reduce your federal tax deposit by the amount of the credits due. And that would be the amount of the credits due for all employees that were paid these codes on the payroll.
All right, Melissa, we do have one question from Katie. What if we still had our pay wages for those pay codes still charged SS on the employer side? It's a little...
So if that's the case, those codes were absolutely Social Security exempt. And so if you did pay those to the IRS, that would be an overpayment in this case because those were not Social Security liable in terms of the employer. So if you paid that to the IRS, you should be due an additional credit back from them because they were exempt. I hope that answers the question. And it might make a little more sense as I keep going here.
Okay, so she said, does it make a difference if we received the PPP or PPA loan? Which I don't know.
If it's the PPP loan that we're talking about, employers were eligible to receive the FFCRA credits as well as the PPP loan, but PPP loans could not, PPP funds could not be used to pay the required leave. So when you're asking for forgiveness for your loan, those wages have to be carved out and you're not allowed to use your PPP funds for those particular wages. It all comes down to you're not allowed to double dip. So the PPP loan was funds given to the employer and they're able to earn a credit back from the IRS for those wages that were paid for the sick leave. Therefore, you're not able to use the funds provided by the IRS through the PPP loan to pay those codes that you're going to also receive a credit on. I hope that makes sense.
Thank
you. Okay, so let's dig a little deeper into this. This scenario that I have on the screen right now is just one paycheck. So now we're going to expand it a little bit and we're going to look at how these codes that were paid to all of your employees then translate onto the Form 941. So that sick paid leave translates onto Form 941, line 5AI. And again, this is a new line on the Form 941 for this quarter. This is the cumulative amount for your entire company for the entire quarter. So again, my example is just one employee's paycheck because I wanted to look at how the credit was calculated. Now we're looking at how it looks on the 941, and the reason that the amounts are different is because we're pretending that it's all of the wages for all of the employees for that qualified sick leave for the entire quarter. So the second piece of it is the family leave, and that is on line 5AII. And again, it's cumulative for your entire company for all the employees for the entire quarter. Okay, so that's lines 5AI and 5AII, which are two new lines on the 941. So I'm going to take this same scenario now, but I'm going to add one more piece to it. So the IRS said that you can get a credit for wages paid for the family sick leave as well as the employee sick leave. And you also could take a credit for any employer health plan expenses paid on behalf of the employee while they were out on those leave codes. So in my scenario that I have on the screen, I want to point out that I added $100 for the health expenses that were paid on behalf of the employee, so by the employer on behalf of the employee while they were out on the qualified leave. So that $100 is on the paycheck so that we can do some calculations with it. I want to also point out that the taxable wages did not change. They're the same for the employee and the employer in terms of the amount. The $100 is not taxable to the employee, so they don't have to count that. So that did not change. What is going to change a little bit is our credit. So let's look at the new credit calculation. The wage amount is the same. There is still no employer Social Security due because those codes are exempt from employer Social Security. The Medicare didn't change. It's still $8.55. And then we get to add in this new $100 that we can contribute to for the employee for their health plan expense during the time that they were out on COVID leave. I do want to point out that if the employee was only out for a portion of the month, you cannot claim all of the expense that you paid for the entire month on behalf of the employee as part of your credit. You can only claim the expense that was accounted for during the time that they were out on leave. So if they were only out for 1 week, you can only claim 1 week's worth of the expense. So to get our total credit due now, we go ahead and add in that $100 and we come up with $697.89, which is exactly $100 more than we had on the last slide.
Okay, we did have a question here.
Okay.
What if employees who were on COVID leave still had enough wages to cover their health insurance employee cost? So the company did not have to cover the employee cover the employee's cost.
And that is fine. You can still deduct it from the employee. This is talking about maybe the employer's share of the employee's health insurance. So if the employer contributes, say, $400 per month and the employee was out for a week, then that's why we can claim $100. Does that make sense?
I think so.
Okay, great. Okay, so back to my credit, we have $697.89, which is exactly $100 more than the credit we had on the last screen, and that's because of that health expense that was paid on behalf of the employee. So we can now reduce our federal tax deposit by $697.89 in this scenario. Again, there are other options, but the quickest, fastest, most preferred way from the IRS to get those credits back is to reduce your federal tax deposit by the amount that you have in credit. So these pieces are exactly the same that we looked at on the last slide. Form 941 line 5AI and line 5AII. Those are the exact same amounts that we saw on the last screen. This new piece, the health expense, has its own line that it gets to go on the 941. It's line 19, and this piece is for the sick leave wages. Okay, so that the health plan expenses that were able to be allocated to the sick leave wages, those would go on line 19. Okay, so we've looked at our scenario of the paycheck. Now let's jump to the actual Form 941 with these credits. So line 5A says that taxable Social Security wages should be entered on this line. So you're going to enter the total wages, including qualified wages other than qualified health plan expenses, because those have their own line item, for the employee retention credit, sick pay, and taxable fringe benefits subject to Social Security taxes you paid to your employee during the quarter. Do not include the qualified sick leave wages reported on line 5AI or line 5AI for the family wages. So they split out the family leave wages and the sick leave wages and put them on lines 5AI and 5AII. The reason that they did that was because those wages are only subject to employee Social Security tax, not employer Social Security tax. So lines 5AI, we've already looked at, that's the qualified sick leave wages. And line 5AII, we've also looked at, that's the qualified family leave wages. And again, those are only taxable to the employee for Social Security, not to the employer. So you'll notice in the middle, it's the amount that you're multiplying it by is just the employee portion, that 0.062, instead of combined employee and employer. So we're going to look at worksheet 1 again, and worksheet 1 is designed so that we make sure that we don't double dip. So it's taking into account all of the credits that you may have been due from other forms and going to make sure that you don't double dip on your credits. So step 1, if we have our Form 941 and we have the FFCRA credits, let's look at step 1 of worksheet 1. So you're taking these lines directly from the Form 941. So 5A goes on line 1A of worksheet 1. Line 5B goes on line 1B of worksheet 1. So from here, we're just going to do some math. We're going to add those lines together, and then we're going to multiply by 50% because we are only looking for the employer's Social Security tax on this line. Again, line 1E is a pretty specific scenario, and we're not going to have anything on that line for my examples. If that applies to you, then that's what you'll have to deal with that. 1F is just going to do some math. Line 1G, again, if you got a notice, that would be entered on that line. Line 1H, we're going to do some math. The credits that you could have had from these two forms, and Form 8974 is the Qualified Small Business Payroll Tax Credit for increasing research activities, and Form 5884-C is the Work Opportunity Credit or the WRPA credit. So if those things apply to you, then you would have something on those lines. Lines 1K and 1L are just doing math. We're just translating down the form to make sure that we have our numbers in place and we've taken into account all of the credits that were available to the employer. Step 2 of worksheet 1 is a new step that we haven't looked at before. So this is taking the steps to figure the sick and family leave credit that you're due. So line 2A is going to come directly from line 5AI on your Form 941. Line 2AI is if the employee had qualified sick leave wages that were over the Social Security wage base, meaning they weren't taxable to the employee because the employee had already made more money than the Social Security wage base for the year. 2AI, we're just going to do some math. 2B is that qualified health plan expense that were allocable to the qualified sick leave wages. So that was my $100 example that we had from a couple slides back. That's what would go on that line. I'm not going to enter that amount on this line because I didn't want my example to get super complicated, but if you had that, it would be on that line. 2C, we're going to figure the amount of Medicare that was due on the sick leave wages. So we're going to take that number, that 6557.09, and we're going to multiply it by the employer's share of Medicare, which is 0.0145. Down at the bottom, 2D, we're just doing some math and we're going to add these two things together. So the credit due is the amount of sick leave wages plus the amount of employer Medicare that was due on those sick leave wages. So in this particular scenario, the credit due to the employer was $6,652.17. The second piece of worksheet 1, step 2 is the exact same idea, except it's doing the same thing with the family leave wages instead of the sick leave wages. They are separated out, so we have to figure them separately. So again, I'm going to go through this a little bit faster since we did the other one in more detail. This line comes from 5AII of your Form 941. Line 2EI is if that employee was over the Social Security wage base, then it would not be taxable to them because they've already reached that limit for the year. We're going to do some math. This is, again, that situation where if you had had qualified health plan expenses that were paid on behalf of the employee by the employer, those would be put on that line. And again, it is split between what was allocable to the sick leave wages versus the family leave wages. So you would need to make sure that you had that amount correct. On line 2G, we're just going to figure out the Medicare tax. And line 2H, we're just going to do some math and add those things together to figure out the total amount of the credit that's due, which is the wages plus any Medicare due on those wages plus any qualified ER health plan expenses that were allocable to those qualified family leave wages. So we now have our completed step 2, all of the lines filled out, and down at the bottom, we're just going to do some math as it tells us to do. and those are the numbers that get entered on the Form 941. So those numbers are going to be added on line 11B of the Form 941. If you had any deferred Social Security tax, that would go on line 13B of your Form 941. 13C and 13D are coming from the worksheet 1. And then down at the bottom, we're just going to do some math. If you had overpaid, you would get a refund from the IRS. So in this particular scenario, this client or this employer had credits and they reduced their federal tax payments as much as they could, but there was some credits left over. So they're asking for a refund on the Form 941 from the IRS for the additional credits they did not reduce their federal tax payments by throughout the quarter. Okay, so a second scenario is a Form 941 with the employee retention credit. So the employee retention credit, again, just to review, is a fully refundable tax credit for employers, which is equal to 50% of the qualified wages that the eligible employer pays to their employee. There is a maximum of $10,000 in wages, which equals a maximum of $5,000 in credit. It only applies to wages paid after March 12th and before January 1st, 2021. And again, the question that I have been asked multiple times is, can you receive both the employee retention credit as well as a PPP loan? And the answer is no. The IRS said no, you cannot do that. So real quickly, the Form 941 with the employee retention credit. So let's look at how that credit would be calculated. So here's some wages that were paid with some pay dates. So the total wages are $138,852.50. That's the total wages that were paid to the employees during the second quarter. The qualified wages is after we take into account the maximums and the 50%. So that's why those two numbers are different. The total qualified wages for second quarter takes into account that when an employee has been paid $10,000 or more in the quarter, that's the maximum. $10,000 is the maximum. So the maximum credit that you could get for each employee is $5,000. Once we have our qualified wages and we've taken the 50% to figure out our credit, that line goes on, or that number goes on line 21 of the Form 941. So we are filing second quarter 941s right now, but the employee retention credit is able to be taken also for wages that were paid for a period of March, which is not in quarter 2. So we have to take that into account, and it goes on a different line on the Form 941. So in this particular scenario, we only had one pay date that was in between March 13th and the end of March. So the wages that were paid on that were $29,397.43. And then after we take into account our maximum and the 50%, we have our total qualified wage. So that piece of it, because we have to account for it separately because it was not in quarter 2, but we're taking the credit on our Form 941 during quarter 2, it goes on a different line of the 941, and it goes on line 24. So with the employee retention credit, if you did not have the FFCRA credits, you would not need to complete step 2 of the worksheet 1, but you would need to complete step 3. So let's take a quick look at that. These numbers are coming directly from the numbers that we just looked at that we put on our 941. So the qualified wages go on line 3A. If you had any health plan expenses, those could also be included as part of your ERC. Again, keeping in mind that it's still a maximum of $10,000 and a $5,000 credit per employee. Lines 3C and 3D are where the March wages come into play. So these lines are only applicable for second quarter. So when we go to file our Forms 941 for third quarter and fourth quarter, these lines will no longer be applicable. On 3F and 3E and 3F, we're just going to do some math. 3G and 3H are taken from step 1 up above, which we've already done the calculation for. And then lines 3I through 3K, we're just doing math to get the numbers that go on our 941. So on the form 941, we have our 13D, which is going to be from worksheet 1, which we just did the calculation on. And then we're just going to do some math. And if you had credits due that you did not reduce your federal tax payments by throughout the quarter, then you can ask for a refund. So in this particular case, the employer would receive a refund for those employee retention credits that they are due back from the IRS upon filing the form 941. Okay, so a third scenario is, again, with the employee retention credit, but in this case, instead of asking for a refund on form 941, we're going to play with the scenario where a form 7200 was submitted during the quarter to ask for those employee retention credits in advance from the IRS. So this is step 3 of that worksheet 1, and it's exactly the same as the scenario that we just went through in this particular case. The form 7200 doesn't come into play until you enter all of the information onto your form 941 after you've completed your worksheet 1. So once you've completed your worksheet 1, you're going to go ahead and complete your form 941. Where it becomes different from the scenario that we looked at on the last slides is you have line 13F, which says that we asked for advances from the IRS on form 7200 in the amount of, and you'll put whatever the amount that you asked for advance payment from the IRS from those forms 7200. And you could have submitted multiple form 7200 throughout the quarter or just one. Either way, you would add all of the amounts together, and that's what would go on line 13F. In that case, since all the credits were asked for in advance from the IRS, there would be no overpayment, and therefore you would not receive a refund because you've already received it from filing form 7200. Okay, so those are kind of the credits and looking at the form 941 and the worksheet 1 and the form 7200 and how all of those things impact the form 941. The last piece that I just want to touch on really quickly is the deferred payment of employer Social Security tax. So if you chose to defer your employer Social Security tax, the period that you could do that from was March 27th, 2020, and it ends on December 31st, 2020. The only thing that you can defer is the employer's share of Social Security tax. It's not all federal tax payments, it's only the employer's share of Social Security tax. The deferred deposits of those taxes are still due, they're just due at a different time. So the IRS said that 50% of the deferred amount is due on or before December 31st, 2021, and the remaining amount is due on or before December 31st, 2022. So if you are deferring those payments, they can be deferred, but they have to be paid on or before December 31st, 2021, and the remaining amount on or before December 31st, 2022. So it's super important that those are paid on time in order to avoid penalties and interest due from not paying those on time. If you chose to defer your employer share of Social Security tax, that amount would be recorded on line 13B of the form 941. That line will be applicable for all of the quarters moving forward through 2020. So it came about on the second quarter filing. It will be applicable for third quarter as well as fourth quarter. All right, man, and that is my presentation. Do we have any questions?
I have not seen any other questions come through, but anybody, if you've thought of someone you'd like to ask us, please do so at this time. I just want to reiterate the Western Region Payroll Association. This was a presentation provided by this new chapter of the APA. It's local to the Western Slope, so we're just going to be payroll professionals providing support and education to one another. If you are interested in becoming a member or learning more about membership, please look us up on our Facebook page, WRPA Western Region Payroll Association, or I will be sending out an email after this webinar, and you can always respond to that email with your questions and fill out the registration form and get it back to us as well. So we did have a couple of questions come in while I was doing my spiel. Let's see. Oh, the webinar will be available as quickly as I can upload it to YouTube and get it posted, so hopefully within the hour. Does the deferred SS tax only apply to employees paid affected by COVID?
No, it is all Social Security tax for the employer between that time frame of March 27th, 2020 and December 31st, 2020.
Okay, thank you. And then is there a way to get a refund of the ER FICA taxes if you already deposited them? Or do I just make my deposits short moving forward?
My recommendation on that would definitely be to file the Form 941 requesting a refund of those instead of reducing your payments moving forward. The reason that I say that is you want to make sure that you are paying all of your taxes timely, and I would hate to reduce those payments just out of pure caution when you could ask for the refund on the Form 941. So that would definitely be my recommendation.
Okay. I'm not seeing any other questions come in, so thank you everybody for your time today. Again, I will have this posted this afternoon. Oh, we did get one clarifying question. So all wages paid to all employees are now exempt from Social Security tax?
No, only qualified wages for qualified sick leave or qualified family leave based on the FFCRA. So regular wages that you're paying to your employees are exactly the same. They are regular wages. They are taxable to the employee and the employer for all things. The only wages that are Social Security exempt for the employer are those COVID-related leave. So the qualified sick leave and the qualified family leave that were put into place by the FFCRA.
Okay. Thank you. Thanks everybody for joining us. Hopefully we will hear more from you soon. And we will go ahead and give you back a couple minutes of your day.